Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Landon Swan. He's a co-founder at Likefolio. Welcome back to the show, Landon.
Thank you. Happy Monday.
Happy Monday to you. So I wanted to hit this one last week. We didn't. It got upgraded. Target's been just under pressure. Landon, I look at a three-year chart of Target, and I'm like, okay, this stock was trading $269 about 2.5 years ago, and everything, I remember us talking about it on the show, everything was going right for Target. They were taking advantage of the pandemic. They were growing out their, pickup service with Shipped and doing well on e-commerce side. Traffic was starting to pick back up. Now we're seeing the exact opposite. I mean, does your data kind of reflect the demise that we've seen of this company over the last, basically 2 years?
Yeah, I'll tell you what, you got a good word there in demise. It's been nasty. I mean, I can remember exactly what you're talking about, exactly how bullish we were. They were doing everything right, and now we're seeing the data's basically turned against them. Mentions, web visits, and for a while their happiness was just completely in the toilet. I mean, it was unbelievable. They went from 61% to 50% in a matter of a week or so, based on some pride stuff. That whole backlash with Bud Light and Target, they were thrown into that, and so we've seen a lot of problems. I think much of the problems that they've had either came from that or with the shoplifting. What they call shrinkage, and they're looking like they're on pace to lose about $1 billion in theft on a yearly basis. They're shutting down 9 stores. If you go to some Targets, you've got like toothpaste and deodorant behind locked glass. That's not a good shopping experience, right? You feel like you're in the bad part of town if you have that kind of experience. You got to ask somebody to unlock it for a $5 purchase. It's kind of ridiculous. So that consumer happiness drop was very, very telling, I think, of what was to come for Target. And yeah, the stock is down, about 40% from its 1-year highs. And like you said, it's down even more than that, cut by over half from the all-time highs. Mentions are down about 37% on a year-over-year basis. And you can see the happiness here as actually the good news here. I'm going to get to some good news. The happiness has bounced back. They were 61%. Down to 50% during that whole time, dropping down. And now they've actually bounced back up to about 67%. We've always seen Target higher than Walmart forever in Likefolio data. For a brief period in time during all of that pride stuff, they actually flipped. Walmart was higher, but now the universe has righted itself, and Target is back to being on top as far as happiness goes. So this is the first slightly bullish sign that we have. On the bearish side, we've got the change in web visits down about 19%. Like I mentioned before, the social media mentions are down in the 30s percent-wise on a year-over-year basis. So you can see Target not hanging with its competition here, Walmart and Amazon. And they're, generally speaking, they have a good in-store experience, but not if you're in one of those areas where, basically shoplifting is allowed and they've got to lock everything down. So it just depends on where you're at, how you're going to think about Target. But we've always talked about it like Folio, purchase intent and mentions and demand. That's the key for the short term. How are they doing? What are revenues going to look like on the next report? But happiness is a little bit of a longer indicator. We've seen it be a leading indicator for consumer demand. And the fact that Target got down to 50 and then, everything fell through, but now it's bounced back up to 67 on happiness is the very first glimmer of hope. This is a pretty forward leading indicator. So we've got to wait for a while for this to work its way through and get consumer demand back up and then revenues up. But I would say that this is a glimmer of hope for maybe 6 to 9 months from now, looking back and saying, okay, $112 was a pretty good buying price for Target. I'm not quite there yet. I'm optimistic that maybe a lot of the bleeding should be stopping soon. And maybe we're in an oversold type area right now, but we don't have demand and we don't have web visits and consumer mentions. We don't have all that primary indicator stuff just yet. We have this secondary indicator of happiness that's saying those will come in the future, but we're not quite there. So depending on your risk tolerance, maybe you could say this is oversold. You could pick some up. I'm still sidelines, but I am, like I said, slightly optimistic that in the future we'll see things picking up for Target.
Landon, this company needs a return to normal in the overall economy because cheap chic has turned into just cheap. They just want cheap, right? And they really have, their discretionary business model. A lot of the stuff they sell is discretionary. They don't, and they only have 2,000 stores, a couple less, based on your comments. But this company has a Walmart problem, right? Walmart has seized this opportunity and really turned the tables on them with dominating grocery, but also keeping their prices at reasonable levels. So the question is, they're not going out of business anytime soon. So it's not that. But when does this pain end? They need inflation lower where people think cheap chic is back in play here, because cheap isn't working for them.
No, I agree completely. That's not their game, right? It was just, just like you talked about. You go there because it's a better experience. Yeah, Walmart's got cheaper prices, but if you start competing with Walmart on price, you're going to lose. And you're going to lose a lot of your brand reputation, what you're known for. And so Target, I think, maybe they may have made that mistake, but I think they just, they made a lot of mistakes around the customer perception with what they were selling, how they were promoting it, allowing the shoplifting, all of that. It just doesn't work. It goes against the brand. You got to be agnostic politically if you're a company, and you got to not let bad things happen to your stores. It's very simple. Like, it's basic business type stuff, but they went the wrong direction and they're being punished for it. And it's sad to see, because how well they dominated during the shutdown. I mean, they did a fantastic job of offering curbside and delivery and really getting out there and expanding their footprint. So, they made great moves in 2020 and 2021, but now in 2023 they made some bad moves and they're paying for it. So I absolutely, this company's not going broke. I do think that 5 years from now, you're going to look back, and if you see a 90 on the chart, maybe over the next few weeks, I don't think it'll get that low, but hypothetically, you see a 90 or 100, definitely going to see a 112, because that's where we're at today. You may look back at that and say, wow, Target was that low. That's my take on it. Eventually, this thing is going to be back up over 200 in years to come. But right now, we're still bleeding a little bit. It's slowing down, though. I'm very optimistic because of that happiness indicator bumping up, but we don't have the rest of the indicators coming yet.
Yeah, Landon, I like that thought process where maybe you go out in duration on something like this, because there's probably still some headwinds with this company. They did close 9 stores in 4 different cities that, theft was just rampant. I mean, they were just getting cleaned out on a daily basis. And I think they're going to do more of that, too, until some of these cities start cracking down on the thefts and stuff like that. But Landon, when you look at the brand here, the brand, a lot of your data deals with the brand and the consumer happiness. The brand hasn't been damaged that much where they can't get out of it, right? Because I think that's the key moving forward, where they can see traffic pick up and some normalization, and that's what they need at this point, where, hey, they can come back from this, right?
Yeah, I think so. I think that, they hopefully have learned a little bit of a lesson. I think the brand took a hit with all of the political stuff that they got into, and you just got to learn from what happened to Bud Light, and Target was the number 2. And when a large group of people band together and say, you know what, we're not shopping there anymore, it definitely hurts the bottom line, and there is a little bit of a residual damage to the reputation. But I think the more that they distance themselves from politics and just be a store that sells good quality items at a reasonable price, but not cheap. That's what people are used to. That's what people want out of Target. And once they get that going, consumers are going to say, okay, this is Target. We can shop there, and it's going to be fine. So I'm looking forward to that day. I think it's going to be, 6 months, 12 months, something like that. And the fact that our happiness is bumped back up, that tells me that is somewhat in the rearview mirror for consumers. And as long as Target stays, straight and narrow and just keeps out of politics and is a business, I think they'll do well in that regard. So I'm looking forward to it, and it's not far around the corner. And like you said, that cities and governments and even the stores, I think, have to crack down on shoplifting. There's so many companies that have mentioned this, shrinkage. It's theft. But I mean, what is it? You talk about Macy's, TJX, Ulta, Dick's, Dollar Tree, Lowe's. There's so many that have mentioned this. It's a huge problem for these companies. You can't lose $1 billion in theft on an annual basis. So absolutely, they got to shut down these stores, figure out that problem, and then move forward, get back to the Target of old. And then, like I said, $100 is going to look cheap in a couple years.
Yeah, got just down below 103 about a week ago. So we'll continue to watch the story, but great data as always, Landon. Appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder at Like.